This daily box pattern has made my trading extremely simple, and it's so easy that a fresh beginner could start trading this today. It helps me understand where to take a trade on the charts, alongside when I should be taking these trades, and most importantly, where the market actually wants to move. And after backtesting this over 1,000 times, it has shown me consistent profits and completely got rid of all of the guesswork. In this video, I'm going to show you the daily box pattern that nobody is talking about, and then I'll show some live examples of how I use this on the charts. Right, so before we actually jump on the charts, I want to give you guys a brief explanation of what the box strategy actually is and what it might look like on your charts. So for the box strategy to be playing out perfectly, your charts will be looking something along the lines of this. And it might look confusing, but I'll explain it all as we get further into the video along with the live examples. So you will have your charts will be moving sideways like this, as we can see here. We call this consolidation or accumulation. And then after this, we'll have a breakout to one side, whether that be the top or the bottom. And this here is our manipulation. And then as we start to move and pretend to go upwards, we'll then have that proper move upwards. And this here is our distribution. So if I mark this out with our boxes, the way that we do, we have our accumulation building up here. Let me just change that box for you quickly. And then after that, we have our manipulation of that area because we've manipulated all of that liquidity and swept it here. And then we have our big move to the upside and we have our distribution. Now, these three boxes are the basis of the strategy, but obviously that isn't enough for you to take an entry. So we need to have more confluences, more information, and see what this looks like on the charts. So the one thing I want to go over first to make sure that this actually works and you don't just spot this anywhere and you can have the best win rate possible is this first box, marking out them points of accumulation and finding the best points. And that best point, in my opinion, and from our research, is making sure that that is session liquidity. And the reason we pick session liquidity and not just any liquidity is because session liquidity is actually so much stronger than standard liquidity. So standard liquidity can just be any point on the chart where there is a high or a low or a build-up of price leading to liquidity. And session liquidity, there's going to be a lot more build-up or liquidity left there at highs or lows of sessions. So to make this first step completely simple and straightforward for you, what I've actually done is I've got an indicator that marks all of this out for you. That indicator is called Sessions by Lux Algo, and it will look a little bit different to mine at the start. However, I'll give you the settings here now so that when you do look at it on the chart with me a little bit later on, they'll look the exact same. This is everything I have set up here. I don't think I've changed anything else. Obviously changed this to your time zone, but apart from that, everything else is laid out as it should be. Keep it super simple, guys. You don't need too much going on here. When you have done that, your charts will actually look like this. So as you can see here, I've got the box marked out for Asia session, the box marked out for London session, and then the box for New York. Now, all three of these boxes are crucial, but the one that we're going to be paying attention to the most is Asia session, because on Forex pairs, this is where accumulation builds up the most, and this is where we have the strongest buildup of price and liquidity. So keeping that in mind, we can now remember that section one or step one of the process is to mark out our session liquidity, which has already been done for us by this indicator. So step one is automatically complete when you go into the chart. Now that that's done, price action will make a little bit more sense, and this first original consolidation box will start to look more like this now, and this is how your consolidation or accumulation area will look before we then have our sweep or our manipulation and then our distribution. So moving on to the second stage, which is our manipulation. This is quite straightforward, quite simple to spot and mark out, but we quite literally just draw lines at the bottom and the top of Asia sessions liquidity or of London sessions liquidity, for example, and we wait for price to break below one of these levels or break above the high. Simple as that. We're just waiting for a sweep of that liquidity of the box that we've already got pre-drawn out from the indicator, and this will mark that we've swept and we've had that manipulation of that price. So now already we've had our accumulation that's pre-marked out for us by the indicator. We've then had our manipulation that is literally just as simple as drawing a line at the top and bottom of the session liquidity and waiting for that sweep. As you can see here, we've had that sweep here. So now that is step two literally complete, and that's everything you need to remember for that step. So as I mentioned, our step one is done for us. That's session liquidity, and that is our accumulation. And then step 2 is just a session sweep, which is our manipulation. And all that is literally drawing them lines and waiting for that. So now we can move on to step 3, which is our first sign of the reversal leading to that distribution, which is a market structure shift. Now, to put it super simply, imagine we're in a bullish market like this and price is moving upwards. Then we have a big break below this low here and we start to move downwards. Quite simply, our market structure shift is going to be at the point where price has these higher highs and higher lows every time. As you can see here, higher high, higher low, higher high, higher low, and then we have a higher high again, and then we have a lower low, and then a lower high and a lower low, and so on and so forth. But as you can tell here, this is the point in which we switched. This last higher low before that new lower low is where we mark out our market structure shift. So I'll just write that on there for you so you can see this is how we're marking the shift. Now let me show you in a bullish example as well quickly. So imagine we are moving down. We're having our lower high and lower low, lower low, lower high, lower low, lower high, lower low. And then we have a higher high because it's higher than the previous one. Higher low, higher high, higher low, higher high, higher low. And again, as I'm sure you guys can tell here, the market structure shift is just here because this is where the previous lower high was broken and turned into a new higher high. So I'll just mark that out again. And this is a bullish and a bearish example of a market structure shift here. Hopefully that makes perfect sense to you guys, but that is the entire third step. That is all we need to look for. So with that in mind, we'll move on to the final step of this strategy, which is the confirmation, and it is our fib entry for our confirmation of that distribution. So let me just go back to our market structure shift example here to show you a little bit what that might look like. So coming back to this example, I want to show you these two steps in the distribution area together. So as we've had our market structure shift here, we can notice that this is the leg that's caused the shift downwards. So because of that, we're going to take our Fibonacci retracement, which you can get on the side here, and we are just going to draw it from the high of that leg to the low of that leg in this example and drag that across. Obviously your fib isn't going to look like this, so these are my specific settings to make sure you have the same. And after you've marked that out, you're literally just going to draw it from the high to the low of that leg that's created the shift. So from here to here. And as you can see here, it taps the 618 perfectly, but this is the sort of thesis or aim is we want price to come and tap the 618. So again, in this bearish example here, swapping to a bullish market structure shift, we have this leg here, as I'll draw them out, it's this specific leg that's created the shift. So because of that, we will take our fib and we'll draw from the low this time up to the high. That's the difference. And then we drag this across, and imagine obviously this would come and tap the 618 or the 07 area within what we like to call the golden zone here. And that's our final confirmation that price is going to distribute in that direction, and then it's just going to fly, and then it's just going to fly and fly and fly and fly and fly. You get the gist. Okay, so now that I've shown you what that looks like on here, let's actually look at it on a chart so you can get a better example and understanding. So I've just pulled up a day on the chart here, and as you can see, we have Asian session, London session, and New York session, excuse me. So we would start coming into the day around just before pre-London or in London open time, and we would, step one, as we remember, is to have our session liquidity marked out, which is already done by the indicator. Step two is to mark our session high and low. So if I did that, we would mark the high and we would mark the low and bring that across. As you can tell right down here, we've actually swept that session liquidity with this tiny wick here. So keeping that in mind, let me zoom right in for you guys to make this easier to see. In pre-London, we have swept it with this little wick here. So because we've swept that liquidity, we've now had our accumulation here, and this is our this is our manipulation here, this manipulation candle. So then we have our distribution moving up here. But how can we confirm this? Because step 1 and 2 have played out. How do we confirm it with step 3 and 4? So now we wait for our market structure shift. So if we look here, we've had our high and then low and highs, lows, and then our low again. Sorry, after that double high, I've marked 2 highs in one there, and then our high, our low, our high, our new low there that I've marked, and then this new high. So because of this new high, we go to the previous last high, which is here, and we drag our line across, and this is our market structure shift. I'll mark out for you there. So that is step 3 complete, because it's a clear market structure shift in the opposite direction after I've drawn the highs and lows on here. So moving on to the final step, the 4th step of this process is find the leg that's created that shift. So that's this leg here that's created that shift, that entire bullish leg there that's created the shift. So what we're going to do is we're going to draw from the low of that leg here up to the high of that leg, which is up here. And that's where we're going to draw our fib. So if I take my fib, I'll draw it at the bottom of this leg here and bring it up to the top of that leg and drag it out and across. And in doing so, as you can see here, we've already been tapped in. So now we actually place our entry around this area. I would place my long positions at the 618 here, and my stop loss is just below that newly caused low, and our take profits at a 2-to-1 of whatever that is. So our 2-to-1 would actually be around there. And as you can see, we absolutely smashed our take profit on this particular example here with no concern at all. We could actually move it to Asian highs because we know that both sides of this liquidity wants to be swept. So you're more than welcome to do that. We normally recommend a 2-to-1. However, if you do, that should be your first TP should be at a 1-to-1, and then a 2-to-1, and then Asian session highs. But you're more than welcome to take whichever point you see most comfortable. We normally take full profits around a 2-to-1 or opposite session liquidity. So again, moving to another day as an example, I do want to quickly add that these are recent examples in these recent markets while the war is going on with Trump as well. So our strategy isn't performing at its maximum capacity. I can show you all of the backtested data, as I'm sure you saw a little snippet at the start of exactly how well our strategy performs in its best months. And obviously we want to make sure that it works throughout. So I'm proving to you here that even throughout the war with Trump and everything that's going on in the world right now, this is still performing, not at its absolute best. However, it still performs and it's still consistent. So if you do want to have access to the backtested data, then join our free Discord in the description, where you can see a lot more information about ourselves and our strategy, and you can get involved with the community, ask as many questions as you need if you need more information. And without further ado, let's jump back into the video. So this second example here, we have our Asian session marked out already. So we draw our high and we draw our low here, and it's very difficult to see, but as you can see here, if I zoom in, we've actually swept that liquidity with that little wick. Now it's very hard to see, and this is why we draw the lines. So this little wick here is our manipulation. As much as you might be shocked to believe, that is where the session liquidity ends, and we've swept it with that first candle just there. So I'll remove the brush just so you can still see that clearly. Now the next thing to do is to wait for our market structure shift. So keeping that in mind, we've had our high here, our low, our high, our low, our high, our new low, our new high, our new low, but this hasn't broken yet. So our new high and our new low, because this still hasn't broken that previous one, and our new high here. And at this point, that is finally broken, creating a shift in structure to the upside. So in this case, we would draw our line here, and this will be our market structure shift. So now we've got our market structure shift marked out, we wait for our final point of distribution, which is our confirmation, and we draw it on the leg. So in this case, this here is the leg that has created that shift to the upside. It is a little bit longer, but it's from the start of that all the way to that leg. So keeping that in mind, we're going to draw our Fibonacci retracement from this low down here all the way up to the leg that created the shift, which stopped here, and we'll drag that along. And as you can see, we perfectly tapped the 618 already, but what I'll do is I will put the position on the charts just so it's easy for you guys to see. So we tapped in here on our long position with our stop loss just below the lows, so just below this low here. And the stop loss is just covering that with a little bit of breathing room, or you can put it perfectly in line for a perfect 5 pip. There's no issue with that. And our take profit would be at a 2-to-1, which is just there. And you can see we almost hit that within 20 minutes. It happened almost instantly. Again, you can drag this all the way up to Asian highs because that was the original liquidity we aimed to take. And at the time, it could have been London highs because we'd already taken that liquidity. So this would be the new liquidity. And just as an extra added bonus in this case, these are actually equal highs here. So there's a higher chance the price will want to come up and take these anyway after we've just taken that liquidity here on the left. So you can set your take profits here, and that is actually a perfect 3 to 1 in that example there. And as you can see, we also hit that within an hour. And this is all in the space of one day. You've had a 3 to 1 within 1 hour, and 3% on that, and an account that's, let's say, an $100,000 prop firm funded account is $3,000 that you've managed to get within an hour. A $3,000 payout. That is huge. So let's fly through this one super quickly, this example, guys. So Asia session liquidity is already marked out. So we draw our high with the line, and we draw our low of Asia session with the line. As you can see, we came quite far through London session before this liquidity was actually swept, but we swept the lows again. So we know that we're looking for buys because this is a bit clearer here. This whole thing is our manipulation now. This is our accumulation here. And now this big section is our manipulation. So keeping that in mind, I will just re-add that line quickly, and we will have our manipulation marked out with a box here, just like so. And then now we're looking for our market structure shift. So we have our high, our low, our high here, and then our low, high, low. You could call this a new high and a new low here, and then our new high here. And again, this has broken the area here. I suppose you could even put it down here if you really wanted to, but I would probably, for extra confirmation, say that this is the high we've broken. And regardless, it doesn't make a difference because the leg will still be the same on the final step of the process. But now that we've got that marked out, I'll just mark that on both of them, just so you can see, depending on whichever one you would want to mark here, because there will be some discretion sometimes with the shift, but you can see here there is absolutely no denying that this is going to be a shift. Okay, so now that we've had our shift to the upside, what we're going to do is we're going to draw our fib on the leg that created the shift. So that is this leg right here. And keeping that in mind, I'll grab the Fibonacci retracement and, oh, let me just move my camera slightly. Grab the Fibonacci retracement and draw from the low of this leg up to the high and drag it across. And as you can see here, again, we have tapped our 618 level. We move our stops to just around the lows here, and I'll take profits to whatever a 2 to 1 risk to reward is, which is right. It's around here. Oh, there you go. Perfect. It's right there. And we've perfectly hit our take profit again within the space of an hour, roughly. It's there or thereabouts. I think it's probably an hour and 10 minutes here, but we've hit our take profit perfectly again. Again, you can aim for London highs here because we know that's going to be swept. And also, this is stretched across 2 sessions. This is something I wanted to mention. So we've actually marked out our Asia sweep here as our manipulation point, and then we've moved into New York session for this. So you can still aim for Asia highs here and drag it all the way up here, which we managed to easily hit. That's a 3.5 RR. Adding that onto the last trade, this is $3,500 from this trade. If you risk 1%, you've made $6,500 in just over 2 hours on 2 days from 2 trades. You spent 2 hours on the charts and made $3,500. You can't get that return out of anything else in life. If you're a fan of a strategy, but you have a few more questions, then there is a free Discord in the description for you guys to join. Ask as many questions as you want. You can also receive the backtested data, and you can have as much questions or talks within the community with other traders that are using this strategy every day to help you get a perfect edge and start to win with this strategy. With that being said, that is the end of this video, so I'll catch you guys in the next one. I hope you enjoyed, and peace.